All right, welcome back, everyone. Man, we took a whole week off. Unfortunately, some things came around. We couldn't really make it, but here we are, man. We missed some big news for sure. I mean, looking at the market, man, I don't know. It's been crazy, man. But hey, I'm your co-host, Billy. I got Wale with me. What's good, Wale?
What's good,
What's good,
man?
Wale? It's
Let's
been
let's
it's
put
been
let's
it's
put
been an
some
interesting
structure
week,
to this
man.
to this to this madness.
Man, it's been some crazy week. So last week, you gotta remember, everything looked like it was the floor just opened up and the market was just going crazy to the downside. And then fast forward to what is it, Tuesday? Was it Tuesday? I think it was yesterday. The market just reversed completely. Again, one of those things that always drive me nuts is the market's not moving on fundamentals anymore, nor does it move on technically, right? Think about it. The whole war with Iran seemed to be moving the market in whatever direction. So whatever the president said, whatever comes from the administration, that's basically what's moving the market right now. Overall, however, we are not seeing movement that's based on fundamental analysis. We're not seeing movement based on technical analysis. We're just seeing movement in the market for whatever reason that's happening, right? So again, yesterday we rallied a little bit. Today, Wednesday, April 1st, April Fool, we rallied like crazy. I mean, uh, NASDAQ and QQQ and SPY, all of those was up like crazy. If you look at all the sectors, I mean, they were moving. We pretty much almost offset the decline from last week. Almost. We're not there yet. But overall, like if you look at the market, the move that we keep seeing is, for me, doesn't make sense. So Wale, man, let's do some breakdowns and please help us out because we are the place now. Is like he talked about it. Like we talked a week, 2 weeks ago. The market looks very bearish, and we got that move to the downside. We broke some key level, and today and yeah, yesterday and today we saw kind of some rallies up to the upside. So let's talk a little bit about that, man. Let's put some structure into what's going on.
So let me just put everything in context of where we were at the end of last week compared to where we were at the beginning of this week. So
Nuts.
usually we track SPY, QQQ, and IWM. So IWM and QQQ were already in correction territory,
Right.
meaning if we look at where they were trading from their highs, they had already made a move of 10% or more to the downside.
Okay.
SPY was getting close to correction territory, but didn't quite get there. Now, I think SPY is a better representation of the overall market. Obviously, it
Yep.
tracks the S&P 500. So,
Yep.
what happened at the end of last week was for the fifth time in 10 years. So, we're talking about something that's happened less than 1% of the time over the last 10
Crazy,
years.
crazy, crazy, crazy.
SPY broke below the 50-week moving average. So that's a big move to the downside. So basically,
Yes.
what it's saying is over the last 50 weeks, SPY was pretty much in an uptrend
Yep.
and it had not broke that level. And it broke that level last week. And this is the fifth time it's happened over the last 10 years. So that's literally what, over 2,000 trading days?
Huh?
So history shows that on average, with the exception of one time where SPY quickly reclaimed the 50-week moving average, this was in October of 2023. The average drop is about 18.1% from that point. So 2008, after we broke it, or I wouldn't say break it, we closed below it. Let me put it to
Close
you that way.
below.
So we
Yep.
closed below it. So 2018, we went 11.9% lower. 2020, which is COVID, we went 26.3% lower. 2022, this is when the Fed was raising rates. We went 19.8% lower. And then last year with the tariff tantrum, we went 14.4% lower. Now, we look at SPY today, and we have closed, at least for the week so far, the week's not over, but we are now above that 50-week moving average. So we've reclaimed it. So the question is, can you trust this move to continue to move higher, or
Yep.
is this just a fake out? And the only reason that we have this move And I think yesterday was the best day for the markets of all 2026 was because it sounds like the United States is trying everything they can to end the war
Yep.
and to pull out of Iran. And it seems that the Strait of Hormuz is no longer an issue to the United States because they're like, we're going to pull out whether it's closed or open. Iran, on the other hand, is saying that all of the things that the US has said about a ceasefire, about they said it's not true. So we don't know how this is going to shake out.
Right. Right.
Mr. Trump is going to talk tonight and possibly give more details. Who knows what he'll say? But I will say that getting above the 50-week moving average is a good sign. But I think the next level that the indexes need to reclaim is the 200
200.
moving average on the daily.
Yeah.
Now, IWM has reclaimed that level. SPY and QQQ have not. So I'll be honest with you, I can't call it. I don't know what to expect because again, from a technical analysis standpoint, that's not what's moving the market.
Nope. Nope.
So
And if you look at how we're still trending, we haven't created a new high yet.
no,
Like
we have not.
all of these moves that we have for the past couple of days, it's cool and all, but we haven't really. If you look, pull up any of the charts, pull up the daily, pull up the 4 hours and 6 hours, you can see what the trend is. The trend is still downward.
Hmm.
You know what I mean? So I wouldn't really get excited right now
No,
about this
no,
market, you know?
no.
And I'm
Mm,
a Wale, like unless we can clear that 200-day EMA and stay there for a couple of days, I'm not really looking forward to doing any long or short term position to the upside right now, honestly.
yeah. You also have to understand that the VIX is trading at 24. I think we hit a
Which is
high
still high.
of
Yep.
30 this week. So
Yep.
24 is still an elevated VIX. There's still some momentum in the VIX. Um, and if you just kind of look at how today the market closed, I mean, that last hour, 2 hours
We got some sellers. Some sellers
was
came in.
was nasty when it came to the selling. So
Mm-hmm.
I'm not a buyer of this market personally. I wouldn't say I'm a seller either. I'm kind of neutral
Mm-hmm.
until we get some clarity around how this global conflict is going to shake out. And unless you're in those rooms having those conversations, I'll be honest with you, I don't think anybody really knows. Now, on another front, bond spreads have hit their highest of the year. We hit a high. So if you look at the triple C bond spreads versus treasuries, we hit a high on the 31st, if I'm not mistaken. Nope, it's the wrong one. We had a high on the 30th of 10.2 basis points. I mean, yeah, so that's over 1,000 basis points. That's the area where you start to get really nervous. Now we've come down to 9.94, but to me, still elevated. Still means that there's a lot of risk priced into the market right now. Um, the longer term bond yields have come down from their highs. I think the 2 year got above 4%. I think
Mm-hmm.
last week, and the Fed is in a cutting cycle and holding rates. There's a mismatch there, and that's not good. Now I think we're below that, but the bond market to me is still signaling there's a lot of risk priced into the market. So
Yeah. Yeah.
I'm not chasing this move. I'm not saying that it doesn't have legs, but I'm at the same time it's like I need more information.
Right. And I don't know if you guys saw that interview with Warren Buffett where he was talking about how he still sees some fragility in the market. You know, the market. He said the market is still has some down moves to the downside. He doesn't believe that we are out of the clear yet. So there is a bigger downturn ahead. That's what he keeps saying. So what does that mean in the short term or even the long term? I don't know. Um, I feel like there's a lot of stuff happening. Like as much as this war, right, has been kind of like moving the market back and forth, I don't think that's the real reason the market is dropping. Like, if you look at the overall economy, there's so much more other pressure beside the war. You know what I mean? We talked about the private credit last time. You know,
Mm-hmm.
we have some crazy stuff going on with, whether it's to be groceries, whether it's to be the energy, whether it's to be. I mean, I'll be curious to see this month numbers to see exactly how that's going to affect energy and all that stuff. I mean, would it affect it? I don't know. Jerome came out and said that there's no really any movement in interest rate, whether up and down. There's nothing like this. He's not willing. They're not willing to do anything right now. They're just gonna wait and see. But the war for me is a distraction from a bigger issue that not being talked about a lot. And if you're not cautious, as a trader or even a long-term, short-term trader, you're gonna probably get clapped. But in the long term, if we do get another move to the downside, I think there is a once in a lifetime opportunity for anyone who's not an investor to get into the market.
Mm-hmm.
Because if we see a crazy drop down to the downside, I mean, like you said, a lot of those, most of some of those, a lot of those indexes, a lot of stocks are beyond correction territory. Like they are down more than 10, 15%. So
Mm-hmm.
there's opportunities right now in the market if you are willing to deploy a little bit here and there.
Yep.
But overall, man,
I'll also,
markets are fragile.
yeah, I'll also say that, um, so we just completed March. The war
First quarter.
started
Yep.
pretty much at the beginning of the month. One of the things that the Fed will have to contend with is what type of trickle down effect did higher oil, put on the market, right?
Okay. Yeah. Yeah.
How much do we see higher PCE? Do we see higher CPI? Um, and if we do see higher PCE and higher CPI, is it something that's going to last a month? Is it 2 months? Is it 3 months?
More.
We don't know what the effects of those things are. I think I posted somewhere where because of higher fuel costs, I think United Airlines was like saying, yeah, we're bumping prices up 20%.
Yep.
You know, there's, you know, there's a trickle down effect, right? Fertilizer is probably getting more expensive. Does that make food more expensive? So many industries rely on fossil fuels, right? Consumers are probably going to be spending more money on gas, right? If you drive to work every day or you drive to the grocery store, you drive anywhere, let's just say you cover the same amount of mileage that you cover every week. You're paying more for that same routine every single day.
Yep.
Here in California, I think the last time I bought gas, it was $6.69. So,
That's
that's not
ridiculous.
that's not something to sneeze at,
That's
considering
ridiculous.
that, maybe 2 months ago, I think I paid like 4.69.
Yeah.
So all of those things still need to show up in the data. We don't know what they're gonna look like. Um, but I'm not optimistic, and I'd be more cautious and optimistic based on how things are moving forward. So we'll just have to wait and see how this all shakes out. So, I think if the United States decides to pull out of the war, I think that's a positive. But even if Iran doesn't open the Strait of Hormuz, that doesn't help anybody.
Yep. Yep.
So, and Iran has basically said that they're not going to end the war until they get exactly what they want. And
Yep.
the question
And
is, will they get exactly what they want?
yeah, yeah, yeah.
We don't
I
know.
mean, they're smart to be leveraging the Strait of Hormuz for their advantage. But the problem I'm seeing now is like when you put certain countries against the wall, they might come back and hit a lot harder, right? So it's like you can leverage whatever you have, but once the other country figure out they can move on without you, you're just gonna be left with whatever demands you have, and everybody's gonna come bumping. So again, I'll be curious to see how this whole war, what's gonna bring this war to an end. Is it gonna be because they got what they needed, or is it gonna be because the U.S. just decided like, you know what, whoever can get across, get across. Whoever doesn't can get across, that's on y'all. We this is not our war anymore, even though we started it.
Which is wild.
It's pretty wild. It's like
Which
we're just
is
gonna pull out.
wild.
We're
Which
gonna
is
pull out because it's not
wild.
it's not our
And
war anymore.
they're like, yeah, that's your problem now. So
Oh man, that's
yeah, we'll
crazy.
see how this shakes out. But to me, this is how I look at it, right? When there are too many unknowns, the market doesn't like that.
The
The
market
lo-
does
the
not like it.
market likes certainty. So
Mhm.
right now there's just too many unknowns, and I'm
Yep.
not gonna try to be in a position to be a a hero and try to assume what's going to
Right,
happen.
right, right.
I'd rather be patient, sit on the sidelines and let everything play out. Once I have more confidence, maybe I didn't catch the absolute bottom. I'll
Yeah,
live with that.
yeah, yeah, yeah. Well, we'll see at 9 o'clock Eastern, 9 p.m. Eastern tonight to see what the president is going to address the nation about and what's that going to do to the futures market. And we shall keep an eye on ear and listening to that conversation tonight. See exactly what he's going to say. But
Yep.
let's move on to Nike, man. Nike is one of those stories that we've been talking about for a while, and we kept saying there is no good news in the horizon. And today, April 1st, 2026, man, they got hit with an April Fool today, man. Nike stock plummeted over 13%. They hit a 10, almost 11-year low. They're trading below $50. And I think we talked about this a while ago. It's like, we think Nike going down a little bit more. The sharp decline is actually because, they have a weak revenue outlook. We always talk about this outlook or forecasting in the future, like how the demand is going to look like in the future. They actually said that it's going to drop. Demand in China is dropping. They had 35% drop in net income, making a 60% plus loss from its 2021 high, right? They do not have, I mean, their revenue is expected to decline by low single digits for the rest of the year. And it's only first quarter. They're already predicting like we ain't gonna make nothing, you know. China dropping. This the turnaround story is gonna take some time. We talked about this too. It's gonna take them a while. They're gonna have to figure it out. They lost a lot of market shares, a lot of little company, and I think we talked about that the Huckers, the OnClouds, all those other companies that now are taking a huge chunk of what Nike used to dominate back in the day. You know what I mean? So well, hey, man, let's talk a little bit about that because is this a stock to buy now, or is this one of those stocks that you like is a broken business?
So, a couple of things that I just want to point out is number one, Nike hasn't traded at this level since 2014, which is crazy.
That is
Nike
nuts.
Nike hit a high in 2021 of $179. Now, this is one thing I will always advise people is even if you see a good stock name, just by name, by a good brand, right, that is trading lower, doesn't necessarily mean it's a good buy.
Goodbye. Yep.
So let me give you an example. So let's just say Nike hit a high of 179 and you're like, wow, this is really good. If it pulls back, I want to be a buyer, right? Nike goes from 179 to 100. That's a pretty significant pullback. So Nike started trading around 100. This was kind of like in 2022, between 2022 and 2023. And you're like, okay, I want to start a position in Nike. But you don't look at the numbers. Let me give you a few red flags from Nike that I will point out. Where are my notes? All right. Let's see. One of the biggest things that I will say that you can look at with Nike, especially with retailers, look at the business. One of the biggest red flags that happened in 2021 for this is, and we're talking about a mature company, right? A company that's been around for years. One of the biggest red flags was operating income in fiscal year 2021 dropped from 6.94 billion to 6.648 billion in 2022. Then in 2022, it dropped from 6.68 billion to 5.9 billion in 2023. Then it reclaimed it. I think it went up from 5.92 to 6.3, but then from 6.13 to 3.70. Operating income got slashed in half. So, operating income gives you a good sense of what is going on with the business. So, the business is the whole operation. Those numbers would have been a red flag in my mind. Now, I didn't track it on a quarter to quarter basis, but I did track it from a year to year basis, and that would have been a big red flag for me. Gross margins. This is in 2022. Dropped from 46.0% to 43.5%. Then from 43.5% to 41.5%. Then from 41.5% to 40.6%. So you see gross margins are getting compressed. Another metric that I like to look at is free cash flow. This one probably didn't show up until what, 2024? Free cash flow went from 7.4 billion in 2023 to 3.70 billion in 2025. So you're looking at those numbers and you're like, okay, what are you spending money on if your free
Right.
cash flow is going down? Are you investing in more factories? Like, what are you spending money on? And I don't think Nike's building more factories. I don't think Nike was doing anything, innovative during that time. So that just tells you that the business, the cash flow is just being mismanaged. Let me see. What else was a red flag? The China revenue was also a big red flag. Overall revenue was dropping. When you see mature businesses losing revenue, that basically tells you that there's less demand for their product.
Yeah.
So there's just, man, I mean, higher margin direct to business started to shrink in 2022. So, I mean, there's just so many things that you can point out that, inventory was too high. So there were so many things that you could have pointed out during those rough years and from 21 to 22 and from 22 to 23, where you probably look at it and say, maybe I'm not a buyer of the business at
Yeah.
this point.
Yeah.
And if I'm not mistaken, I think there might have been a couple of incidences, maybe once or twice during that time frame where they did maybe do some job cuts. I really think that that's probably going to happen again. They got to start cost cutting, and I don't know where
Yeah.
they're going to start. I don't
Yeah.
know if it's going to be headcount, it's going to be marketing. I don't know, but this is this is to me is a warning to investors that if a stock is cheap or is dropping, you want to find out why.
Yep.
And if
Yep.
it has anything to do with the core business, you probably want to stay away. Now, at 46 bucks, what, 44 bucks? I don't know. You want to take a flyer? I
I
will
don't know, man.
I don't know. I can't say it because again, what did the CEO say about future growth? There's not going to be any future growth.
There's no
And
future growth.
what are you investing for? Future growth.
Yeah. Yeah. If I can get a return on my money, why am I putting my money in there?
Correct. So the
So
next level I'd be looking at for Nike, this is a monthly chart. I mean, the 400 month moving average is 37.76.
yep.
That might be an area where maybe I get interested in the stock. But I mean, and if I'm buying the stock at that level, trust me, it's a flyer. Like
Yeah.
I have no hope or no, there's nothing to me to be bullish about based on what was reported in this last earnings report. That's
Yep.
just me.
Yep.
So,
Yep. Yep.
you know, I would just leave it at that. That business is not something I want to be a part of. And I think that there's probably better places to invest your money outside of shoe apparel.
Yeah. And I agree, man. I mean, in terms of the business, like it's they definitely lost focus. I would say it probably started around 2020 with the whole
Mm,
pandemic and all this stuff. They did a few things that I was like, whoa, what are you guys doing? This is not your business, your core business, right? One, they start flooding the market with things that were supposedly exclusive, or people really like shoes that people like, this shoes, I have to wait for it to drop or I gotta look for it. They
mm,
start making a lot of it because they're like, hey, people are paying crazy amount for these shoes. Why don't we just make a lot of it? Duh. It's like supply and demand. Like that's why people are going for it. Once you flood the market, of course the price is gonna go down. Like no, everybody has that shoes now. Why do I need to go and pay $200 for it? You know what I mean? I can pay $50 for it because you guys flooded the market with it, right? The second thing they did is they went into subscription businesses. Great idea, bad execution, right?
mm,
They start doing more subscription. If you gotta look at Nike, Nike, whatever they call it, Nike Run, Nike Workout, and all those different things. I think they almost attempted to do a deal with a Peloton or some one of those companies, right? They starting to get athletes in to record workout videos for their, to be able to kind of do subscription. They wanted to move into that model, right? That model is great when it comes to software, like companies like Microsoft and all this stuff, because it's recurring business that you get locked in for like however long. But if you do a subscription business when it comes to like consumers, you really have to know how to execute. Like that is the biggest thing. The other thing they've messed up on is their core business was making shoes for running. They completely neglected that whole
Mm,
sector. If you go back, they probably stopped making like new shoes for running, like for the long ultra marathon and all these different things. They stopped producing new shoes. And guess what? Companies like Hoka, companies like OnCloud, there's other companies out there that they just came and they start taking a chunk out of it. And once people find a product that works for them, it's hard for them to leave out of it. As a company, it's easier for you to keep your customers than to go out and get a new one. The cost of getting a new customer is crazy ridiculous. You got to run ads, you got to run all different events. You got to be able to spend so much money in order to bring maybe like 50%, whatever you spent, maybe even 20% of whatever you spend in new customers to come in. And you hoping those customers will repeat customers, right? So I just think their execution on a lot of levels has been lacking. Getting rid of your head of like, branding and marketing, all these different things that makes shoes that people want. You got rid of all these people. And guess what? You no longer have a business anymore. You just have a company that's sitting there and competitors gonna come. And we have seen this story before, guys. Like we've seen this story with IBM, with Watson. We've seen this story, believe it or not, with Blockbuster and Netflix. You know what I mean? We've seen this story before. A company comes in, dominate the market for so many years, and then they get relaxed. And then the next thing you know, another company comes and to do something new, shiny, faster, better, and people gravitate to that, and just it's done from there. So
yeah,
I think the business is, if they don't do anything in the next couple of years, I think either they're gonna get bought out or the business is just is gonna be stagnant for a few years.
yeah. And I will say, I'm not sitting here trying to like, give doom and gloom to Nike. Obviously, it's a global brand that, still has a lot of brand equity. But when I look at if I was an investor and had cash to deploy, this is probably not something I'd get super excited about long term, right? That's just, that part of the business is just not where I would want to, put my money. Now, they might make a comeback. Who knows? I just don't know if it's the risk reward to me is just it's not as appealing to me
Right,
personally,
right, right.
So um I just don't like what I saw and what I heard on that earnings call yesterday. And
Yeah, yeah,
we'll see how it plays out, man, because it sucks to see a good brand like that you've known for so long just get
yes.
absolutely
They got beat.
smacked.
They definitely got beat.
And I keep trying to say this sometimes again, right? You see a cheap stock, that doesn't always mean it's a good buy. I mean, look at Allbirds, right? The shoe company. That stock had a valuation at one point of $4 billion.
Sheesh.
They just got bought out for 39 million, which is less than what some superstar athletes are making in the NBA, and what is less than what some superstar quarterbacks are making in the NFL. Like Dak Prescott could have bought Allbirds. He
Yeah,
makes 60 million a year.
yeah,
So, when you see a stock like that dropping, make sure you do the research on what's going on with the business and don't just say, oh, Nike's a good company. They're not going bankrupt anytime soon. I'm going to buy Nike. Let's just say you bought Nike at 100. You're down 60% from 100. So imagine the people who were buying it at like 150, 130, 120. You probably got to either keep averaging down because you believe in the name, or then you got to wait. But
yeah, yeah. Pretty much.
Do your
You
research
have to do the research. You got to
before
look at the numbers.
you got to build a case. Always build a case or a thesis around why you feel the stock will turn around.
Yep.
Because when we looked at Intel, when Intel was dropped from like what 70 to like 40,
Mhm.
I was like, that's a pretty significant drop. But they haven't shown me
I
anything
haven't shown anything. Yeah.
that shows me that they're ready to turn the ship around. So once we started seeing signs that the ship was starting to turn around, what did we see? Cost cutting. We saw change in leadership. We saw that they're in a business that is in need moving forward.
Yep.
There's still demand for their business. So that's when we started saying, 18, 19, $20, I'd like to get in this
It's a
name.
good buy.
And
It's a good
and what
buy.
did we saw the turnaround. So always be able to build a case around why you're buying something that's gotten beat the heck up, maybe down 30, 40, 50%. So
Absolutely. Absolutely. Well, let's move on, man. If you go for Oracle, man, I hope you're not part of those 30,000 people that got fired. I mean, you woke up to a crappy morning, man. I would wish this on nobody the way to get fired. Waking up to a message saying that you were laid off. 30,000 people received an email morning, early morning. No phone calls, no conference calls, no talking to your manager. Some of the managers didn't even know that employees getting fired. 30,000 people just got laid off based on that. I mean, that is a massive, massive layoff. They're not the only one, right? I think a couple of weeks ago we heard Meta laying off some people too, So there are some crazy steep cutoff that's coming up in a lot of people. Now we could talk a little bit about how what is that going to do to the unemployment numbers? We talked about that. Like those numbers, are they going to keep adding up? Is the numbers not going to change? We're getting a
mhm.
lot of people losing jobs now. So when will we actually see those numbers in those unemployment? But the bigger question is why are companies that are in tech laying off so many people? Why
the,
they?
the biggest thing is they are saying we are prioritizing spend on AI over people. Last time we were on here, that's what we talked about. Businesses have showed you where the priority is. It's not headcount, it's not hiring, it's trying to do more with less with the help of AI. Now, Oracle, record net profits, right? They took on some debt to help finance some of the build out for the future, right? They made some big promises. The stock got beat up. Now they're in the phase where they're saying, now we got to start cost cutting, right? Because you take debt, you got interest you got to pay. You're going to be, it doesn't seem like they're going to, be cutting back on spending on AI anytime soon. So, I think businesses are basically saying what their priorities are. Now, the Oracle numbers, I think 20 to 30,000 people getting fired, that's worldwide. I don't know how many are in the
Yep.
US. I don't think Facebook's numbers have completely come out. The crazy thing is, if Facebook would have not wasted all that money on that stupid metaverse, they probably would have been able to keep some of their
They probably would have been
employees.
okay. But it was so much money, man.
They wasted so much money on that project that they, are looking to make cost cutting. So businesses are putting themselves in a position where they think that they can produce the same amount of output with less headcount. And we all
Yep.
know what the most expensive bill is if you're running a business is people, health
Employees.
insurance,
Mhm.
401ks, salaries. And they're saying that those cost cutting measures could possibly save Oracle, I think what they said, $8 to $10 billion a year. So which is crazy.
Yeah, yeah,
It sucks, but this is the environment that we're in.
yeah.
People
Unfortunately,
don't want to be left out in the AI race. And if they see an opportunity to be more efficient and to be, you know, more effective, they're gonna jump on it. And I don't
yeah,
think they're not gonna blink.
yeah,
Yeah,
yeah.
they're not gonna blink. So
Man, you know what's crazy though? Like, what this is actually telling me, man, is like you really need to work on one investing aggressively in the next few years. Like, it's just like there is no job out here that's safe, right?
no.
If companies can do without you, even if you are somebody who's doing handiwork, we always talk about maybe like handiworks like plumbing and electricians and all the different things.
I think those are safe though.
We think it's safe now until we figure out a way to do it without them. You know what I mean? I'm just saying, like, we think it's safe now. We look at so many jobs from back in the day, we're like, oh, this job will never be done by a robot. I
Hmm.
mean, now you see a lot of jobs being done by a robot. You know what I
That's
mean?
true.
And I just think right now it is, if you're in a position and you have a job that you're able to not worry about for the next 2 3 years, I really really think people should urge and reconsider. If you're not putting money in your 401k, please go ahead and put money in 401k. If you're not investing in the market, please invest in the market, because I'm telling you, man, like I think these companies, if they can figure out a way to not have employees, they will do. Investors who invest in those companies, they'll make more money. They don't care. You know what I mean? So it is time to really. I think the time is getting shorter now to really reconsider investing in the stock market and putting something somewhere else.
I'll also say that, a lot of these public companies, I think the biggest thing that you have to understand is their number one like priority, or their number one like the people they care about the most are shareholders,
Shareholders.
right?
Yep.
Like when I used to work at Merrill Lynch Bank of America and we'd have these calls, Brian Moynihan would always say, "We have a duty to our shareholders." And those people come before you as an
Yep.
employee.
Yep.
That's just the nature of the beast. That's just the nature of the beast. I worked for a private company that was not a publicly traded company, but then got bought out by a publicly traded company. And what's the first thing that happened? Headcount chops.
It counts. Yep. Every time. Every time.
So,
Yep.
private companies that don't aren't publicly traded, they don't have that same duty, which I think is great. Public companies do.
Mhm.
So, and I'll say that, from an emergency saving standpoint, usually people tell you 3 to 6 months. I'm thinking you probably might need to start thinking 6 to 12 months.
Man,
Like that might
long,
you might
long
you might
time.
have to stretch that buffer, because I mean you go on these sometimes you go on these Reddit channels and you see people who've been looking for a job for the last like 1 year, 2 years or
Yep.
longer.
Yep. Yep.
And a lot of it has to do with companies just cutting cost. So
Yep. Yep. And these people are not like, somebody who has no degree. These are like experienced people. These like
hmm
technical people who,
hmm
have worked for years. Those are professionals
yep,
that
yep.
can't even find a job because, yeah, companies are just not hiring. And I know we talked a bit about this a while ago. It's like all these companies that you see posting jobs on their thing, what do they say? Like up to 60% of it is fake. They're not hiring. They're just posting stuff to post, which is crazy. So again, uh, I really feel bad. I feel so bad for all these guys that woke up early in the morning thinking they're about to go to work. You get an email at 6 a.m. saying that your job is no longer needed, and very, very unpersonable. It's just like get an email from probably from the AI that replaced your ass. So it's just
Yeah,
crazy.
that's what was probably even funnier is they probably used AI to decide
That's what I said. Like,
who to
you
let
probably got,
go.
yeah. They're probably like, can you just generate a list of people, departments that we can let go and still be able to operate at a capacity. So again, man, it's a very sad thing for somebody to wake up in the morning and your job is no longer there. I mean,
Hmm.
again, Block did the same thing, Meta did the same thing, and we saw companies like Microsoft, Google, and all this. And last year, a couple of years ago, also was doing those things. So it's like those layoffs been happening, on a cycle basis. So
Hmm.
yeah, I'll just be curious to see how's that going to impact the overall job
Unemployment.
numbers.
Yep.
Yeah,
Yep.
yeah. But let's move on to SpaceX, man. I mean, I think we've been waiting for this news for a long time to see when Elon is finally going to take SpaceX and make it public. I mean, at a valuation of about 1.75 trillion. I don't remember any company. What was the highest company that ever had a valuation so far? I don't remember.
I want to say Saudi Aramco, but I
Mm.
don't. Does Saudi Aramco trade on the on the
I don't think they
United
do.
States Stock Exchange? I don't think they do.
I don't think they do.
No, I don't think they do.
No, I don't see him on here.
Yeah. So if they don't, I think the biggest was Alibaba.
That's true.
Yeah, I
That's
think the
true.
biggest was Alibaba as far as market cap is concerned.
Yep.
So Saudi Aramco, I know was a big public move, but I don't know if they trade on the public on the United States exchange. So I don't know if that counts. But yeah, SpaceX. Whew, what is it? 1.75
1.7 trillion.
trillion
Mm-hmm.
valuation that they're aiming for.
Yep.
I'll be honest with you, that might be a good short.
For the short term, yes. Hell yeah.
Yeah. For the short term, that might be a good short in my opinion.
Yeah.
Now,
Yeah.
the thing is, when they go public, you got to open up your books. You got to show us what's going on under the hood.
Yep.
So people will
Yep.
have a opportunity to see, does the business justify a $1.75 trillion valuation? Now, SpaceX merged with what? XAI? Or
XAI.
was it
Yep.
XAI? Okay.
Mm-hmm.
So, yeah. So we get to see what's under the hood.
Yep.
Um, I saw that OpenAI is shooting for an $852 billion valuation right now based on their last funding range. I'll also say that could be a short
Mm-hmm.
opportunity because at the end of the day, the market will dictate what you're worth.
Yep.
You can't hide behind the private markets and be raising money. And I would not be surprised, in my opinion, if when the lockups expire, we see a ton of selling because these venture capital guys and these private equity firms, right? They make their money on the exits. So I think that if they've been in this position where they've been waiting for opportunity to exit, right? You know, private credit markets aren't looking too good. Liquidity looks kind of tight. You might just have to pull the trigger and sell some shares. So I would be, I mean, that's probably going to be a very expensive trade, but I want to see when the lockup expires and if that is when we see the big selling in those names because
Yep.
you don't make money from as a private equity firm until you exit
Yep.
completely
Yep.
from your
Yep.
position. And
And these people been waiting for years.
I think they've been waiting for a long time. They've been waiting for a long time. And I
Yep.
also think that again, there's just to bond yields are telling me that there's not a lot of liquidity out there, right? I think I just saw an email where they were saying that the Fed might be thinking about loosening some of the capital restrictions from banks because I think there's a liquidity crunch. I think
Yep.
so,
Yep.
and some of these private equity firms have also been dipping their toe in the private credit
Private credit.
department. People are trying to pull money out and they're telling people they can't. They might have to, to satisfy some redemptions, they might have to pull the trigger on some of these equity positions they've been
Yep.
sitting on.
Yep.
So I don't know. I might sell everything I have and bet it on SpaceX, but
Oh man. I mean, we're definitely gonna see some sell-off, right? I don't know
I
if it's
think
gonna
we're going to see a
happen.
sell off. I
Yeah,
think so. I think
I don't know
so.
if it's gonna be a huge dump right after the lockup period expire, or it's gonna be maybe like a few months after. I don't know. So
Hmm.
but you're right. Like some of those big investors who's been in there for a long time, this is their payday. Like, they might not sell everything, but they definitely gonna sell enough shares to be able to like recoup some of their investments.
Yeah, recoup some of their investments. And
Yep.
again, I think this is the biggest thing for me is that these private equity firms, they got a lot of money tied up into private credit, money that's probably not as accessible as they would like. And as
Mhm.
they're starting to get redemptions to balance that out, they might have to pull the trigger on some of their private equity positions and sell those to be able to, balance the private credit issue that they've been in. So I don't know. I'm just curious to see how Elon is going to get is justifying $1.75 trillion valuation. That's what I want to see. That's what I want to see. And when that S1 drops, I will spend hours going through that S1 and looking at all the minute details and saying, is this a position I want to eventually short? So we'll see.
Yep. Yep. But again, it's one of the biggest IPOs debut that everybody is waiting for. So we shall see what's gonna happen with that.
Hmm.
But on unrelated news, I mean, I think you sent me that article that Google. I don't think it's an actual product yet, but Google wrote an article about quantum computing and how they're able to crack those Bitcoin encrypted keys in less than 5 hours. I think that it was a short amount of time. I mean, with the advance of how fast, yeah, this says 9 minutes. I mean, that's crazy. 9 minutes. I mean, I think the last time we were talking about this, we were talking about like maybe months, you know what I mean, for you to be able to crack. But now it's like 9 minutes. The possibility to be able to crack an encrypted Ethereum or even Bitcoin code in 9 minutes, that presents a huge, huge, huge dilemma for anybody who's owning cryptos. Because that's what crypto basically pride itself on is you can't crack it. You have to like spend a lot of computing energy to be able to find that specific keys. But it's saying that the super quantum computing is going to be able to do it in 9 minutes. So again, that's going to be a very interesting thing to see if it actually came to fruition, or maybe Google is bluffing. I don't know. We shall see.
Yeah, we'll have to wait and see with that.
Yeah. But let's move on to some economic calendars, man. Let's see what's going on this week when it comes to some of the news that we are actually going to be watching for in the coming days. So let's see. April 2nd, tomorrow, we have the initial jobless claim, of course. We'll see how those numbers look like. Of course, all this layoff, that's not probably not going to show up on there, but we'll shall see what the numbers looks like. And of course, Friday, we have the unemployment report. There's nothing major happening there. April, we have the consumer credit. That's a good number. That's a good one to kind of keep an eye on. Consumer credit on Tuesday, April 7th. There's nothing going on Monday, April 6th. Then we have the FOMC minutes Wednesday, April 8th at 2 p.m. Actually, that's the minutes from the Fed meeting. And then Thursday, we have PCE coming also at 8:30 a.m. We have a lot. So we have the personal income, personal spending, the PCE year-over-year index, core PCE also at the same time, GDP, and the initial jobless claim. And of course, we have the CPI coming on Friday, 8:30 a.m. So next week, we have some good numbers coming up so we can see like exactly how that's going to impact the market. But overall, we don't have so much stuff going on to the end of this week. I mean, not a lot of economic calendar coming up here.
Yeah, the big ticket items are probably going to be later with CPI and PCE for the month of March.
Yep.
So whenever those drop, to me, those are going to be, you know, big market movers because we want to see, did the spike in energy and oil stocks, did that shock the system?
Yep. Yep.
And does that change the Fed's goal of what they're planning to do for the rest of the year? I think I'm in a camp where I'm saying zero rate cuts this year.
Absolutely. I don't see we went from what, 3 to 2 to 1 to
I think I'm going to say zero. The
yeah.
only way we get rate cuts is if the recession indicator elevates. And if the Fed feels that the economy is in danger, kind of like what they did in COVID, and they had to make an emergency cut to zero, to me,
Mm-hmm.
that's the only time we're going to get a cut. That's my opinion.
Yep. Yep.
So
Yeah. But other than that, man, as we head on to the next week and even like the end of this week for Friday, any last minute advice, tips you want to give the people?
nah, I just want to say the first quarter of 2026 is over. Um,
Thank God.
and despite um, the type of year that we had, there've been some good, there've been some pretty solid winners out there.
Mhm.
So if we're looking at some names, let me give out some names that have done fairly well real quick. I'm looking at the wrong data. Let's see. I want to go to year to date. I want to go to last 6 months. Okay. So SanDisk, I mean, that stock has just been crazy. Like, I don't even know how to explain this. I don't even know how
It's
to explain it.
ridiculous. It's
I mean,
ridiculous.
if you look at where the stock opened the year at $243.97 and hit a high this year of $707.60, and now it's trading at $692.
Ridiculous.
Crazy.
But that goes to tell you like the memory industry is very much needed in everything that we do right now.
Hmm. I
That's
actually,
nuts.
I'll give you another name that not a lot of people have talked about, but that's had a good year so far. Let's look at Moderna. Opened the year at 29.76 or 29.83 and hit a high of 59.55 and it's now trading around $50. So that stock's almost pretty much doubled
Ooh,
so far
that's a
this year. Quietly,
that's a
no one's
quiet mover. Yeah.
that's been a quiet mover.
Sheesh.
Um, Micron is another big winner we've seen this year. Let me see. Is Micron? No, Micron's not a big
Yeah,
winner.
they drop a
Yeah,
lot.
they've come down a lot. So SanDisk is one. What's it called? I mentioned Moderna is another one. It's got a lot of losers though. So if we look at some of the biggest losers this year, Adobe, um, Atlassian, which is
Atlassian.
Team,
Yep.
Workday, um, and another big loser that we've seen this year. I think I wrote it down. I'm trying to think. Can't remember the name, but software has been hit pretty hard, mainly because of Anthropic and Claude, right? So a lot of these names, I think Adobe's cooked. If Adobe doesn't reinvent itself, they're absolutely getting
I
cooked.
think so. I think so
Like
too.
that's a stock I wouldn't touch with a 10-foot pole.
I think so also.
But as I said, I still think there's a lot of value in cybersecurity long
Yep.
term.
Yep.
So yeah, we've seen you know, a red quarter overall for the markets, but there are still certain pockets where things are going pretty well. So don't don't think everything is all doom and gloom. You just got to know where to look. And if you don't know where to look, we got the investment group that'll
Gotcha.
help you find really, really good opportunities. So, and I think we've talked
Yep.
about a few of them here on the show. So, yeah, we'll keep digging and hunting, but we still got to get through this. We got to get through this nastiness that we've seen in the market over the
Yeah.
last month. So let us, be patient and you know, hopefully things will shake out.
Yep. I would say be patient. Let's see how this we'll see what the president says here in the next, minute or so, what's going on with the war in Iran and how it's gonna change the market. But yeah, but while they said, man, I honestly think there's a lot of opportunities coming up. Like I just even the drop that we had, if you are patient, if you're deploying money here and there, like we are definitely seeing some great opportunity coming up.
Hmm.
So if you're patient, man, I'm telling you, you're gonna be okay in this
Yeah.
market long term.
And I'll say this too, if I think on my Instagram page, The Ethical Investor, I the first pinned thing on my page is the best investment opportunities over the next 5 to 10 years, right? Because I will say this, regardless of how this war shakes out, again, at some point, maybe the intensity starts to die out. I don't know. Like I'm not a war expert, so I can't, I'm not gonna sit here and act like I am. But at some point, right, you kind of get over the shock effect of what's really, really going on. Now, if they basically just lock down the whole Strait of Hormuz and they just be like, we not go, that's a completely different story. I
That's
don't know.
different. Yeah.
I
Yeah.
don't know what's going to happen if that does happen. But we've seen wars in the past. We've seen things kind of eventually subside. I still can't believe that Ukraine and Russia have been fighting for 4 years.
Yeah, it's still going.
I
It's
still
very
can't
it's,
believe that.
it's very strategic now because they're running out of weapons and stuff, so they're only hitting strategic areas like the power plants. So yeah.
Yeah. And if the war continues, right, I'll say this, there's always a playbook for what to buy
Yep.
because I mean, unfortunately, there are publicly traded companies that make
Yep.
weapons, right?
Weapons. Yeah. Yeah.
You know, people are saying
Indeed.
that if people are saying oil could get to 200 a barrel. I'm so mad I got shook out of Oxy, man.
Yeah, that move was nice. That move was nice. I caught a little bit of it, but it was nice.
Someone in our group made a 300, I think 18% return in Oxy.
That was a nice move, man.
Man, that thing was moving fast. That thing
Hmm.
was moving fast. So yeah, I will say this, even if this war continues, there's going to be something that's going up or down.
Yep. Oh damn.
So we'll
Yep.
just have we'll just have
Yep.
to wait and see how things shake out. But
Yep. Yep.
like I said, we're in a stage where I still feel that there are opportunities out there, but at the same time, nothing wrong with just waiting and doing
Waiting.
absolutely
Yeah.
nothing.
Yeah. It's better to wait than to jump in early or too late and you lose money and stuff. It's honestly better to wait until you can see a clear signal. Because right now it's just we've seen some crazy move up and down, up and down. There's not
And,
like steady movements.
and we're seeing a crazy move down right now on SPY.
Oh, what happened?
SPY is getting SPY is it's getting a little volatile. I
Oh,
just
I
saw
see it.
a big red candle on the 5 minute.
Oh yeah, I see it. Yeah,
Yeah.
it's gonna be interesting when we wake up tomorrow and see where the market is. I guess the president is probably saying things that people don't like. So we shall see, man. It is
Yeah.
gonna be interesting over the next couple of days. So
Yeah. But I will say this personally, until we get over that 200-day simple daily moving average, I'm
yeah,
just I'm just gonna hold my breath and just
yeah,
I'm not buying anything at that point. So
yeah, yeah.
all
Oh
right.
wow. All right, y'all. Well, that's a wrap for us here at the Wall Street Rundown. It's always a pleasure having you guys here. Please stay tuned with us, follow us on all social medias, and we will see you guys on Friday to see how
Yes,
this
sir.
market closed the week. All right.